Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, while Bitcoin is still playing out this short-term warning signal, the price is also liquidating hundreds of millions of dollars worth of long positions, while Bitcoin is now running into this critical area of support that we need to pay attention to, while Ethereum is still playing out this short-term bearish signal. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before taking a look at the Bitcoin charts today, we need to talk about the Bitcoin news today, because just yesterday on Wednesday, we actually saw a small net inflow into the spot Bitcoin ETFs, which is of course better than what we saw on Tuesday, but still not that great. Because obviously, as I said in my last video, on Tuesday, we saw a net outflow of around 78 million US dollars, which basically means the Bitcoin ETFs are dumping on the market. But on Wednesday, we saw a net inflow of around 44.5 million US dollars, which is not a net outflow. So that is still good for Bitcoin, but technically speaking, that's not really anything major. That won't really affect the price all that much. And so with that being said, over the last couple of days, the Bitcoin ETFs have not really been a help to Bitcoin. In fact, on Tuesday in particular, they were bad for Bitcoin, with those net outflows causing sell pressure for Bitcoin. And with that being said, if we're taking a look at the new Ethereum ETFs, the spot ETH ETFs that only launched on Tuesday, by the way, and on that launch day on Tuesday, we saw a net inflow of just over 100 million US dollars, which is good news for ETH. But just yesterday on Wednesday, we saw a massive net outflow. And so on Wednesday, we saw a net outflow of over 133 million US dollars. So at least as of right now, we've actually seen more outflows than inflows into the spot ETH ETFs that only launched on Tuesday. And now, in case you're new to all of this, you might be wondering, how is a new ETF that only just launched, how does it have more money coming out of the ETFs, withdrawing from the ETF, than what has actually gone into the ETF? And the reason behind that is basically due to Grayscale, because before the Grayscale ETF right here became an ETF, essentially it was a fund that held a lot of Ethereum, and then they essentially took that fund and then turned it into an ETF. And now that a lot of that ETH is essentially free, it can escape the Grayscale ETF. A lot of people are doing that. They're withdrawing out of the Grayscale ETF due to their extremely high fee. And this is exactly what we saw as soon as the Bitcoin ETFs launched back at the beginning of this year. In particular, the Grayscale Bitcoin ETF had massive net outflows from just the Grayscale ETF. Of course, right here, we can see a total outflow from Grayscale from the Bitcoin ETF of nearly 19 billion US dollars since they actually launched back in January. And once again, that was caused by the massively high fee that Grayscale slapped on their ETF, much higher than any of the competition here. And they've done the exact same thing with Ethereum, which is resulting in a lot of ETH leaving their Ethereum ETF. And when that ETH gets paid out in US dollars, essentially Grayscale is having to dump that Ethereum on the market to pay out those funds in US dollars. And so one of the main reasons why we've seen the recent dump, especially in the price of ETH, is due to Grayscale, with their very high fees causing a lot of people to withdraw their ETH out of Grayscale, causing sell pressure. And if we're looking at the effect that the Bitcoin ETFs had on the price as soon as they launched, and that Grayscale effect on the price of Bitcoin, that was right back here. And over the next few weeks, we actually saw a short-term dump or a crash in the price of Bitcoin, but ultimately we did see a recovery back to the upside later on. And so just keep that in mind. In the short term, we could be a little bit more bearish, especially for Ethereum, due to these ETFs just launching and thanks to Grayscale dumping ETH on the market. But at some point, this Grayscale selling pressure will stop, because at some point, Grayscale will either run out of Ethereum or investors will just stop withdrawing out of the Grayscale ETF. But with that being said, taking a look at the Bitcoin charts today, this is on the 4-day Bitcoin chart. Looking at the super trend indicator, this is still sitting in the green, and this will only flip back into the red, pointing towards a bear market if we see a 4-day candle close confirm below around 55.8k, which as of right now has not happened. And once again, just a reminder, and especially in case you're new to this channel, even during a larger bullish market or a bull market right here, we can see short-term dumps and short-term bearish trends here and there during a bull market, as we've seen time and time again, especially during this stage of the bull market. We were even seeing dumps along the way during that more bullish stage. And of course, over the last few months, we have seen a lot of sideways price action, choppy sideways price action over the last few months, which is also what we saw previously during this very bull market about 1 year ago. And so in order to confirm the end of the bull market, we ultimately need to see a lot of confirmation on the larger time frames, which at least for now has not happened. So technically speaking, we can still remain within the larger bull market, even if the short term may be bearish. And with that being said, if we're taking a look at this daily Bitcoin chart, over the last 1 to 2 days, the DXY has actually been basically trading sideways. So we don't really have a lot of new information here in the DXY that we can work with, because if the DXY is sideways, that's basically relatively neutral for the price of Bitcoin. It's not really affecting the price of Bitcoin all that much as of right now. But usually when the DXY is trending in the bearish direction, that is almost always bullish for Bitcoin. And usually when the DXY is trending in the bullish direction, that is almost always bearish for Bitcoin, as we can see time and time again. But with that being said, taking a look at this daily Bitcoin chart, and over the last few days, obviously we've continued that rejection from this critical area of resistance, sitting in between around 67,000 to around 68.3k approximately, acting as strong resistance. And since that rejection, we've actually come back down to this area of support that I've been talking about here on the channel, sitting in between around 63 to 64,000. And so far, as I've recorded in this video, we've seen a bounce exactly from that price range. And so at least as of right now, that is the short-term area of support and resistance to pay attention to for the price of Bitcoin in the somewhat shorter term. And honestly, I'll not be surprised if over the next few days, maybe over the next week or so, we basically just see some choppy sideways price action within this sideways price range, essentially bouncing between support and resistance right here, kind of like what we saw back here, for example, or back here, where the price is just ranging between support and resistance. And personally, I'll start flipping more bearish again in terms of the trend and momentum if we start seeing a break below this area of support. So if we confirm a daily candle close well below 63,000, and especially if we flip that into new resistance, then that would be a clear indication that the price is reversing into a new bearish trend, at least in the short term here. But for as long as we hold above this area of support, which so far we're doing, at least as I've recorded in this video, for as long as we hold above this area of support, it is still possible that we can remain within this short-term bullish trend, and this could possibly just be a bit of a short-term pullback within the bullish trend. Because we did end up seeing pretty much exactly that right back here, basically a short-term pullback during a short-term bullish trend, and we saw the opposite right around here, essentially a bullish relief or a pump back to the upside in the shorter term during this short-term bearish trend. And so that is why it is important to understand the difference between the different time frames. In the immediate short term, as in talking about the coming days, maybe over the next week, I am bearish to neutral, as the price is basically playing out a bit of a short-term cool-off, but possibly now entering into more of a sideways price range. So bearish to neutral in the immediate short term. But once again, this can occur during this bullish trend on the daily time frame. And ultimately, when we're zooming all the way out, looking at that 4-day time frame, technically speaking, we're still within that larger bull market, as I've been saying since the beginning of 2023. And so for a year and a half now, I've not changed once on this larger bullish trend here on the larger time frames. This entire time, I've basically stayed the same for 1.5 years. But on smaller time frames, that is when we see things flip between bullish and bearish much more often. And so as we're zooming into smaller time frames, like the 1 hour chart, for example, or anything smaller than that, expect those time frames to basically flip between bullish and bearish essentially every single day. So if yesterday was bearish, today could be bullish, and tomorrow could be bearish again if we're looking at the 1 hour chart, for example. But if we're zooming out, looking at the big picture, this stays within these larger trends for much longer. And with that being said, if we're taking a look at this 8-hour Bitcoin chart, as of right now, the price is technically still actively playing out this bearish divergence, which I warned about over and over again here on the channel right back here. And since then, it's been playing out exactly as expected in the form of a short-term pullback, which is one of the most likely outcomes from a bearish divergence, either a short-term pullback or at the very least some choppy sideways price action, basically a break from all of that bullish price action, just a bit of a short-term cool-off, which is playing out right now. But considering this is on the 8-hour time frame and it's already been playing out over the last few days, I don't necessarily expect this to play out much longer, possibly over the next couple of days. But once again, the price is now running into this critical area of support, so we could start leveling out again in the short term with some more neutral price action, most likely coming in the next few days. And with that being said, if you want to trade these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit, so I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now over on Bybit, where you could potentially win up to $100,000 just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And with that being said, if we're taking a quick look at the Bitcoin liquidation heat map, over the last one day, we've liquidated hundreds of millions of dollars worth of Bitcoin long positions, which is what I was talking about in my last video before it happened. Because of course, as I explained yesterday, we had more liquidations to the downside, especially close to the price, just to the downside here compared to the upside, which means it's most likely we're going to see some bearish price action in the short term to wipe out those liquidations. And now that we've seen that play out, what are the levels of liquidations to watch out for now? Well, as of right now, we still have a lot of liquidations sitting right just above 63,000, more specifically in between around 63,000 to 63.4K. And so I'd be paying attention to that area on the chart right there. Once again, we're most likely going to revisit close to 63,000 to wipe out those positions just above 63K. And now obviously nothing is a 100% guarantee, but this is just what is most likely going to happen based on this chart right here. And as for liquidity to the upside, we do have a little bit of liquidity at around 67,500 and around 68,500 to 69,000. But with that being said, the majority of the liquidity is still sitting just below the price, just above 63,000. And with that being said, if we're taking a look at Ethereum on the daily time frame, just now the price is essentially invalidated this bullish breakout right here, because the price is now breaking back below the point of the breakout, so back below around 3270. And so this essentially invalidates that short-term bullish trend that was beginning to play out right here as we saw over the last 1 to 2 weeks. But once again, with the latest pullback below that level, this is now invalidating that short-term bullish trend unless we can see a very quick bounce very, very soon back to the upside before this candle closes, which so far is not looking too likely. But with that being said, if we're looking at this 8-hour time frame, the price is still playing out this bearish divergence that I've been warning about basically every single day since the price was close to 3.5K. And so far, we're still playing out the bearish divergence in the form of a short-term pullback. And so once again, that's one of the most likely outcomes, usually a short-term pullback or some choppy sideways price action as the most likely outcomes from a bearish divergence. So nothing too bullish, usually bearish or at the very least neutral. And at the same time as playing out that bearish divergence, we were also rejecting from major resistance in between around 3480 to around 3520. And so at least for now, that's still a significant area of resistance on the price chart for the price of ETH. But it is worth noting that right now, the 8-hour Ethereum RSI is entering into oversold territories, which is a signal telling us that this bearish divergence right here has now played its part and is potentially now over. And now it's also worth saying that this signal by itself is not necessarily enough to confirm the end of this bearish movement right here. For example, we could see a bit of a short-term bounce or sideways consolidation to reset the RSI out of those oversold territories and back to the upside before potentially giving us more room to the downside later on. Because we saw exactly that right back here. We actually saw an oversold signal in the 8-hour RSI right here, and we did see a bit of a bounce and sideways consolidation over the next few days here, but ultimately we did stay within the short-term bearish trend. And so potentially for the next 1 day or so, we could see the price start leveling out here, basically stopping this extreme bearish price action right here just for the next couple of days potentially. But in order to expect a lot more bullish price action, we need to see other bullish signals, not just this signal by itself. And with that being said, if we're taking a look at the 4-hour time frame, the price clearly broke below this critical level of support over the last 1 day, which was sitting at around 3370, and that was the level where I said we should flip a lot more more bearish once we break that level right there. And we can clearly see that as soon as we saw that first 4-hour candle close just below that level at around 33.70, we flipped a lot more bearish as expected the moment we broke below that level. And so right now, when it comes to support to pay attention to, as of right now, we're still hanging around this 50% retracement level, which is sitting at around 31.60, give or take. So that is acting as a bit of short-term support as we are hanging around that level. But with that being said, the main area of support, at least in the short term right now, is sitting in between around 30.50 to 30.80. And we can see back here, that was previous resistance and support for the price of ETH, and that's also the golden pocket area of support based on this Fibonacci retracement tool. And honestly, if we see a break below around 30.50 with candle closes below 30.50, then in that case, expect to move potentially below $3,000 back down towards these previous lows. But once again, at least for now, we still have these levels of support to pay attention to. And if we're taking a quick look at the price of Solana on the 12-hour time frame, right now the price is holding up around this area of support despite dropping slightly below this area in between around 170 to 175 after obviously rejecting from this area of resistance in between around 183 to 187. And not only was the price rejecting from critical resistance, we were also rejecting from oversold territories here in the 12-hour Solana RSI, as I also warned about back then here on the channel, because I compared it to what we saw back here, where coming next, we did actually see a short-term dump. And now if we actually see a rejection from this area, so if we reject from 170 to 175, then in that case, the next short-term support is sitting in between around 159 to 161. So basically right at around 160 should be major support based on previous support and resistance. But if we start breaking well below 160, honestly, we could drop all the way back down towards the low 140 price range if 160 does not hold as support. And now if the price of Solana can quickly reclaim 170 to 175 and bounce from that area, then in that case, it's still possible, if that happens very soon, it's still possible that we can remain within this short-term bullish trend, because ultimately a trend is basically higher lows and higher highs in the price, with the momentum generally pointing in the bullish direction for most of the time during a bullish trend. But obviously at some point, once the price breaks below key support, fails to break out above key resistance, and also starts forming lower lows and lower highs, those are all key indicators of a new bearish trend. And so right now we're on the very edge of potentially confirming a new short-term bearish trend if we cannot quickly reclaim this area on the chart. But with that being said, if you want to trade these moves in the price of any crypto, once again, check out those links down below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions. And the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.